Bitcoin makes it almost to 74K just to get rejected again. Bitcoin is holding above 70K. Is more upside still to come, or are we finally going to get that big drop we've been waiting for? Let's find out. Welcome back to Flexcandle, where we read the candles and flex the moves. Right now it's about 8 p.m. Eastern time and the price of Bitcoin is currently at 70,733. We're gonna start off here with the 2-week chart. This candle is closing pretty much right now in 6 seconds, and it's going to end up closing green, so this is going to be bullish, but we did get rejected off of basically this 80 moving average at 70,586. This is going to be bullish, but we barely got above this 80 moving average. You can see the wickage, we got some rejection there. It is green, so we have to say it's kind of bullish, but look, this is starting to look weak. The stochastics are aside, this could easily roll over again. So every time that we get a little bit slightly bullish, we always get pushed back down. Here on the weekly, the 21 moving average is currently at 78,145. We ended up closing green, but it's not as green as I would have liked it to be. We have a big wick here downward. At least we do have 2 green candles in a row. The stochastics are higher than these past 2 stochastics that we usually do roll over on. Let's see what happens. Hopefully we could still make it towards this 21 moving average towards 78K. Take a look at the 5-day chart. Now the 5-day chart was looking good. This candle closes in 3 days, but right now it's red. And if it ends up closing red like this and we cannot get above this 200 moving average, above this 21 moving average, this is going to probably be tweezer tops. And after we get tweezer tops, you guys see we usually roll over. This is going to show rejection off of this 200 moving average, and I'm just hoping that we could play out this double bottom, because if this double bottom could play out, we could get back above this 21 moving average. We take a look at the 4-day chart. The stochastics here show that maybe we could have one more chance to get another hump up. We barely got above the 21 moving average, and now this candle right now again is trying to get a tweezer tops. We still have 2 days. Let's see if we could remain above the 21 moving average. On the 2-day chart, this candle just closed and it closed red. We got a red engulfing candle, tweezer tops. We basically got rejected off the 50 moving average. We need to stay above this 21 moving average. We lose this 21 moving average again, we're falling straight back into this bear flag, which has a measure move taking us down to 44K. Right now we're above the bear flag, so we need to maintain ourselves here and break above this 50 moving average. If not, I see more downside coming. Stochastics are getting toppy here. We could easily roll over. That's why even though we get a pump up, we can't get too happy, because this bear flag here has just been looming. Eventually we cannot make a big move up. We're just going to end up breaking down. On the daily chart, the stochastics are rolling over. This is not good. We got above the 80 moving average briefly, and now we're starting to lose it. Now what kind of pisses me off is that this one red engulfing candle takes away basically the last 5 days of being green right here. These 3 candles are gone, and most of this candle that got us above the 21 moving average is almost gone. So we basically lost almost most of the gains. The only thing that's bullish right now is that we've been able to hold above 70K. If we lose 70K, I see a lot more downside. We need to hold the 70K level. 22-hour chart is looking bearish. We're rolling over. The 12-hour chart, I was almost certain we were going to go and touch this 200 moving average. We got rejected. We could still do it. We need to stay above this 21 moving average. That's at 70,132, and we could bounce back up and see if we could touch 200, break above it. But it's not looking good that we got rejected. This time around, we were able to get above the 200 moving average on the 10-hour chart, so that's bullish in itself. Stochastics are resetting, but we might still have to be here a day or 2 before this could start rolling back up. If it does, we're already starting to lose the 21 moving average. That's bearish. We need to hold this 200 moving average. We cannot lose this. This is a big time frame that took a long time to be able to get above the 200 moving average. We lose this is going to be bearish. The 8-hour chart, same thing. We're starting to lose the 21 moving average. We need to stay above this 200 moving average to stay bullish. On the 4-hour chart, now we were able to make a lot of gains just on this 4-hour chart. We had this double bottom pattern. I gave you guys the cup and handle pattern. Then here recently I gave you guys a flag with the measure move taking us to about 75,650, and we did not make it all the way to the top of the measure move. We did more than half of the measure move, almost at 74K. And this is why I like to tell you guys, the measure move is just the potential. You do not have to wait for the whole measure move to take profits. It's always good to take profits beforehand just in case, and this is a just in case moment. We got tweezer tops here, and as soon as we got that, boom, we've been falling down. Now something that concerns me here about the 4-hour is the stochastics are reset. Again, we could drag here for a while. Look how we dragged here for a little bit. Hopefully we could start rolling back up, but look, we lost the 21 moving average. We're holding above the 50 moving average. We definitely need to hold above this 200 moving average in order to stay bullish. Here we briefly lost it, and then we were able to come back up. So if it's a scenario like this where we lose and we could come back up, I could deal with that, but losing it is not going to be good. Now concerns me here is that this could end up being a head and shoulder pattern. There's 3 variations of a head and shoulder pattern here that could play out. We have one here, shoulder, head, we make it up to the 21 moving average and then roll over. That's a head and shoulder pattern. This could be a head and shoulder pattern. Left shoulder, head, once again we make it up to the 21 moving average, we roll over, that's the right shoulder. Or we could keep on falling down, lose the 200 moving average, and this will be left shoulder, head. Like I said, we lose the 200 moving average, then make it back up slightly above the 200 moving average like we did here. That would be the right shoulder, and that will give us even a bigger move down. So to negate all of that, we need to get above this 21 moving average of strength, and more importantly, we have to get above these tweezer tops. We have to get above that 74k resistance. If not, more downside is to come, I believe. On the 1 hour chart, stochastics are showing you we're rolling over and we're being held up by this 200 moving average at the moment. Now this candle closes in the next hour. We could close like this. This could be a tweezer bottom. Maybe we invert head and shoulder here, left shoulder, head, double head, maybe right shoulder, or this could just be a double bottom that brings us back up. This is going to be the line in the sand for me. If we lose this 200 moving average at 70,542, the last resort is going to be this 4 hour. We lose this, I have to get bearish. Again, you guys already know, once we lose the 200 on the 4 hour, I get bearish. Now on the 15-minute chart, we've been lost the 200 moving average. This looks to me like some type of a bear flag. This is looking to me like a head and shoulder as well. Left shoulder, head. This could be a right shoulder, kind of like slanted. This could make us roll over. Stochastics are low, but look how many times we rolled over here before we made it back up. Something similar like that could happen. But right now, guys, the line in the sand is 70k. Worst case scenario is 69k. I really feel like if we lose 69k, we're heading down. If we could hold above 70k and above like 70,500, if we could hold above that, maybe we have the chance to make it back up and test that 74k range again and see what happens. But like I said, everything has to do with the war news. Everything was going good. Once they said yesterday that the deal was no good, everything started dropping. The fact that we're even above 70k is actually pretty good, and we never know. This goes on a day-by-day basis. Maybe tomorrow they make some type of a deal, an extension, something, we go back up. But right now, our main priority is to stay above 70k. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.